Good Wednesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with my partner, Jason Gaunt. How you doing, my friend?
I'm doing okay. Kind of choppy, ugly, messy day today.
It was a karate day today in the market. Let's put it that
Yeah,
way. How about
ooh,
that? It was a
karate.
karate day.
Expand. Where's that from? Chops.
Yeah, lots of chops, a lot of chopsticks. Yes, indeed it was, my friend. It was a choppy day today, and unfortunately a day where we ended a bit in the red. But you know what? The day's all behind us. All we can do is focus on tomorrow, and that's exactly what we're going to do. Let me tell you what we have lined up for you this afternoon. The retirement income reality check. Oh, yeah. When you get into retirement, folks, here's one thing that you want to be thinking about. Not so much this, how much money you've accumulated, but what's going to be the cash flow. And there's something going on right now, and that is this. As a retiree, you're more anxious now about running out of money, trying to stay ahead of inflation, pay the bills, maintain a good stock market performance in your stock market assets. All of these things culminate together when you are in retirement. And it can be overwhelming, right? Especially if you're trying to manage the money yourself. There's so many things going on. I mean, Jason and I deal with it every single day, hour by hour. This market moves on headlines, right? It moves on the president's true social post. It moves on any bit of news. The algorithms move the market in a dramatic fashion. And then you get down at the end of the day and you go, what happened? And kind of like yesterday, I mean, we set a record on the Dow Jones Industrial Average, right, Jason? And today, we give it all back, and the 200 plus point gain yesterday and a little bit more. Now you start questioning, okay, is this the beginning of this pullback that you and I have been talking a lot about? I mean, there's a lot of different things, but the bottom line is this: when you're in retirement, you have a lot of fears that someone that is working does not. And that's what we're going to be tackling. We're going to reveal 10 real fears that keep you as a retiree awake. Now, if you're not in retirement, don't think this isn't for you, because at some point, hopefully, you will be able to retire. And I promise you, these fears will not be any different 5 years, 10 years from now than they are at this particular moment for those that are actually in retirement. So we put together a great list of these 10 fears. And most importantly, of course, not only are we going to tell you what they are, but we're going to give you solutions to those, what we always like to do. So the retirement income reality check will be our topic here momentarily. In the meantime, my friend, we have a lot of things that happen during the market hours, and also a few things going on in the after hours. Why don't you take the market hours and I'll take the after hours? How about that? We'll split it up.
That sounds like a plan, right? I'd say the biggest movers during the day, Netflix had earnings. Overall, it wasn't much of a miss, but it was a slight miss. They blamed some issues with taxes in Brazil, but
they owe Brazil some money in taxes. They're fine.
Yeah, a little bit, but it's also just, I think, highlights what we've talked about quite a bit, right? When stocks are as high as they are and markets are as high as they are, you have to outperform what expectations are in order to keep the balloon afloat, right? And so in Netflix's case, people probably have a fair amount of growth inside of that holding, and down 10% when all was said and done is not much of a surprise. The stocks, I mean, they made some comments about overall doubling their business in a pretty short window of times. Any hiccup of any kind along the way just gives people some, at least, reason to take some profits. Saw weakness in Texas Instruments. That's another bellwether, not necessarily on leading edge as far as an NVIDIA or AMD or someone, but more I often say the common man with a Texan, right? It tends to be more in the calculators and more analog parts of the business that almost get a good read into the economy, not necessarily AI as a theme, et cetera, right? And they started to talk about some deceleration, slower pace than previous cycles, so on and so forth. Those aren't the words you want to hear from a technology company. They were down about 5%. But Amazon was weak today. Again, you can touch on Tesla after the close. Even Apple gave back about 1.5%. So small caps, so you felt under the cover a lot of these momentum names, the nuclear, the quantum, those types of names have been underperforming, right? You felt this momentum profit taking, not necessarily the momentum factor per se, but the high flying, low revenue, low earnings type companies. There's been some profit taking as you're getting near the highs. And those are oftentimes the canaries that we keep an eyeball on. They can be swift moves high, but they tend to be even swifter moves lower. And those have been showing their hand a little bit. Not to say it's something that can last forever, but people are, the skeptics are back, I would say, at least near term. I'm sure they'll be bullish again at some point, but you feel like there's more of a skeptical theme inside the market right now. So that's really where we are. As you mentioned, the Dow was at all-time highs just a day ago, so it's not like we're crashing by any stretch. It's just more of, you need to keep things positive and momentum going in order to keep the market doing so. And any little bumps out of a Netflix or Texan could have a little bit of a negative bias into earnings season.
There you go. Excellent. Let's go back to to the Netflix story for just a moment, and then we'll work our way to the close and what's going on in the after hours. So you mentioned it was down 10%. I want to throw this out there. That was, by the way, $124.98 loss, finished at $1,116.37. But back to this issue that what the street had the problem with is they cited a Brazilian gross tax on outbound payments that they're battling the Brazilian government about. But I think the most important thing, Jason, is this could have been a very much of a oversold condition going on, simply because the company said, look, if it wasn't for this tax issue going on, we would have surpassed a third quarter guidance. Investors, back to your point, I think we're priced for perfection right now. This is always a dangerous thing when you're trading at record levels. And so you're priced for perfection. Street's like, we don't care. We know what you reported, so therefore let's punish you, and hence the reason there. You agree on that?
Yeah, no, I completely do. Yeah, it's always one of those stories to me, like in Netflix, that they have such a moat and they seem so impenetrable that at some point they have to trip up, right? Where people just get tired of it, or
Yeah.
the
Well, they seem to have on again, off again quarters. It's never
yeah.
consistent. They'll go a couple quarters where things come in above expectation. Then they have one like to this, they miss and they punish it, and it's just a
They just have so much IP, right? All of these
Yes.
shows and brands and things, and that they use the analogy this morning that they have at CNBC talking about that they have more IP than Disney has, right? With
Mhm.
all these different shows and such. But you get saturation too, where there's only how many incremental buyers are there,
That's what
right?
I say every quarter. It's like, where
Yeah.
did you just find that
They find them
2
somewhere.
million additional subscribers?
Right.
Like,
Yeah.
you're knocking on doors in third world countries. I don't know. I don't know where they come from.
Like
I still,
airplanes with like little
yeah,
things across the back.
I still personally get very frustrated, and like you, it's like you have this subscription, or I don't know if you still
I don't
do, but
use it. My wife
yeah,
does.
I don't use it either, and I'm like,
Every
it's
once in a while, there'll be like
so
a
old.
thing.
Everything is
Yeah.
so old, other than some good,
Other than
series on there.
comedians.
But yeah, hey, you want to watch Top Gun for the 2000th time? Hey, you can find it on Netflix. It's right there in the top. Anyways, all right. Speaking of technology, let's move on to Apple. You mentioned this one briefly. Some news came out today. I don't know how valid it is, but indicating that the demand for the new iPhone Air is weaker than expected. So that pressured the stock, $4.32 loss there. I want to mention Amazon real quickly. You touched on this, $4.04 loss, 1.82%, $217.99. I read an interesting article yesterday. I think it was in Bloomberg. And Jason, it was about, remember we had a client 2 or 3 years ago. I think I included you in the conversation. He called up and he was looking for a business. He's retired, but he wanted to invest some money in a business. And he goes, what do you think about becoming one of these Amazon delivery companies, right? How Amazon started allowing people to become a company and be a Amazon delivery company. And, we looked at it and stuff, and it was like, well, long story short, I told him it wasn't worthwhile doing it. Well, what's going on now is these contractors are just furious at Amazon. They're going, wait a minute here. We're not making nearly the amount of money that we basically were told we were going to make. Our costs are going through the roof. Amazon, which leases the vans back to them, hit them all with these massive bills, these repair bills that Amazon ended up backtracking and reducing the amount of what the bills were going to be. So bottom line, these poor contractors, their expenses are going through the roof, and the revenue that Amazon's paying them is going down. So, if you start to see a little bit of delay in your prime delivery or something, that may be one of the reasons that many of these people that were interviewed, these contractors, like, I'm done. I can't. I was making, like, one person said, yeah, we made, I think net 120,000 last year, and we're going to be lucky to make 75,000 this year.
Wow,
and it just keeps going down because Amazon is controlling everything that they do. It's almost a franchisor franchisee model. So we'll keep an eye on that and see if that has, any impact down the road. Do want to mention Intuit Surgical. This was a big performer today. How about some robotics to get your surgery done? Man, did you see that stock today, Jason? $64.29 gain, up 13.89%. 527.03 is the close. Again, very, very good earnings numbers there. Now, let's, since we're a little ahead of schedule, let's go ahead and jump into the after hours session. I know many of you are waiting to find out what happened with Tesla. First of all, let me tell you what the stock is doing in the after hours. It is down, lost a little bit in the pre-market or in the regular session, but right now down $15.61. Again, that accounts for what happened in the regular session. It's a 3.54% loss, 427.03. The stock moving lower is I guess you would call it a mixed third quarter result. They made the good news. Let me get that out of the way first. They had a 12% increase in their third quarter revenue, brought the number to $28.1 billion. Sales were strong, but the earnings, 50 cents a share after adjustments, that was short of Wall Street's expectation of 55 cents. The one that's going to, unless it changes overnight, which usually it does not, could affect the market tomorrow, at least in the pre-market, is IBM, Dow Component. Right now in the after hours, the stock's down $11.85 to 70.20. Good numbers. Matter of fact, the revenue came in line with Wall Street's estimates. The consulting and infrastructure business exceeded projections. Again, overall, it was a beat on both the top and the bottom line. Specifics, they made $2.65 a share. Estimates were $2.45. Rev came in at 16.33 billion. Estimates were 16.09 billion. But again, the stock coming under pressure. Back to what you were just saying a moment ago, we're kind of priced to perfection right now. And if all of the metrics, their top line, the bottom line, growth numbers, etc., don't exceed Wall Street's expectation, then they go, oh, okay, thank you. We've had a nice run up. Let's take a little profit, and they move to the sidelines on it. So, anything you want to add on those two?
No, I think again, it's very much a sentiment game at this point. You got to beat a lot, or you're probably going to get beat up.
Yeah, exactly. All right, you're now up to date on what happened in the regular session, up to date on what happened in the after hours. We'll come back, hit the commodities, interest rates, and then get into our topic, the retirement income reality check. Let's turn it over to Kristen Snow, Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Jason Gaunt. We do appreciate you joining us. The retirement income reality check coming your way in a moment. First, let me tell you where these markets finished up. A 334-point loss on the Dow, 0.71% to a close of 46,590. NASDAQ lost 213 points, 0.93%. S&P down 37 or 0.53%. Oil kicking back a little bit. We've been nicely below the $60 mark, getting close to it again. 58.51 is where we closed, up $1.27 for the day. Looks like they're not done selling on gold yet, Jay. $44.90 loss, $4,065.70 an ounce.
Yeah, I think it's just in that bucket of momentum, right, that we talked about, that some just over-owned areas that are ready to distribute a little bit. And that's,
right.
Right. Whenever you get those parabolic moves, they don't tend to continue. You've got to keep a close eye on them. They reverse pretty quick. Not to say that we can't go higher in the future, which I expect we probably do, but near term, buy the dip may get you in a little bit of trouble if you're a short-term investor, for sure.
Right, exactly. And finally, on the bond yield side, very quiet, down just 1 basis point to a yield close of 0.95%. All right, the challenges of a retiree, right? It's all about the income. That's how you're able to survive and continue in your retirement, right? It's all about the amount of money coming in versus what's going out. But there's a lot of fears going on with retirees today. And obviously, as we said, they're always here. And so we thought it'd be a good time as we start to see more market volatility. Recently it's been on the upside, but we got to prepare you for the downside when that time happens. And what do you do if you're a retiree? Because remember, folks, it's always different when you are a retiree, how you view, how you feel about market volatility and frankly, just surviving, right? You're on a fixed income and that makes a challenge in and of itself. So we put together a list of 10. Hopefully we can get to them. If not, we'll do our very, very best on how to solve the fears that are facing retirees in 2025. All right. So the first point that we'll get to, and then Jason will take point number 2. We call it the paycheck gap anxiety. As retirees, of course, you go to a steady paycheck or from a steady paycheck to uncertainty, right? You don't know, especially if you are deriving retirement income off of your portfolio, right? Let's say you establish, I don't know, let's pick a simple number. Let's say you got $100,000 in your 401k that you moved to an IRA when you retired, and you're going to do a 4% withdrawal. So you're going to take $4,000 a year off of this, all right? Divided by 12, that's your monthly income. Well, it was a 4% withdrawal rate. Okay, pretty common. But what happens if that 100,000 drops to 80,000? So you go through a 20% market correction. Now it's not 4% anymore. It's a significantly higher withdrawal rate. And if that trend continues for any length of time, guess what? You really start eating into that principal. And if it's large enough, eat into the principal, you may never recover. So you have to sit back and go, okay, this is my situation. I'm drawing income off of a volatile asset. What do I need to do? I need to start deriving more fixed income sources. The solution, or what we call the fix to the paycheck gap anxiety, is this. Turn your savings into predictable paychecks, structured income ladder, things like annuities, like bonds, CDs if the interest rate is high enough. Things that you hear us talk a lot about from the standpoint that no matter what happens in the market, that paycheck is going to be coming in every single month. And this is one thing we do when we do a cash flow analysis with our clients is we, again, break down our fixed income versus fixed expenses, variable income versus variable expenses. Don't try to lump variable expenses and don't
Income.
try to lump variable income with against your fixed expenses, right? One again is variable, right? Your stock market is typically your variable income. Your fixed expenses are things like your mortgage and car payment and things like that. You don't want to do that. Again, the ultimate goal when you're trying to solve this paycheck gap is you want to try to say, okay, I've got whatever, $3,000 a month coming in fixed income. So things like annuities and maybe a pension and social security, so on and so forth. Cool. I got $3,000 coming in. It's going to be here no matter what. What are my fixed expenses like my mortgage and things? Oh, let's say they're $2,500. Okay, well, I'm $500 positive on my fixed expenses. But what if your fixed expenses are far greater than your fixed income? Well, one thing that we do is we then look at that and go, okay, what can we do? Let's take a little bit of money from the variable investments, i.e., the stock market, and try to put it into some of those fixed income buckets, and again try to get as much of a steady paycheck coming in because again things are great right now in the market and the economy. You especially when you're a retiree, you have to plan that things aren't always going to be that way, and nothing is more scary when you're a retiree than deriving almost all of your retirement income from something like a stock market portfolio, and then that portfolio drops and you're going, oh boy, you're suffering mentally from seeing that principal drop, but you're also suffering because that withdrawal rate you started out with is now significantly higher because of the drop. So again, the fix there is try to derive as much fixed income as you possibly can from your investments. Oh, Jason, one of your favorite, the shrinking dollar syndrome, point number 2.
Yeah, inflation, it hurts. It doesn't tend to go down a whole heck of a lot. It just continues to rise. And there's asset classes on the fixed side that can help protect you from portions of it. The stock market, dividend stocks that, people often will say, certainly ones that are linked to inflation specifically. Dividend stocks can help you. There's bonds that are inflation linked, just items that increase in either yield or price as a function of equities, or more so inflation moving higher. That's very common. Tips or something that people look like, again, those treasury instruments that have a mechanism to them that increases the value of the product when CPI is increasing, right? So those are things that you very much should at least keep in the back of your mind. If you're worried about inflation, there are things that keep up with inflation. Commodities tend to, property, real assets tend to keep up with inflation, but it's tough to sell property quickly when you need it for monthly income, right? So liquidity is also very important. But yeah, the inflation problem is always going to be here. You just need to make sure you hedge it.
Yeah, and we all know, those of us that have been around a while, again, just go back and say, what used to be a price of a gallon of gas or a gallon of milk or anything like that, and just keep multiplying as inflation, rises. I mean, it's just part of life. You always have to account for it. But I want to take you back before we go to break. You mentioned the dividend yielding stocks. People are going, wait a minute, inflation and the stock market. Break that misconception about how the stock market does hedge against inflation, like at some point.
Well, the stock market, if we think of the US stock market in dollars, right? So, all things being equal, if inflation occurs and the value of the dollar decreases, yet Amazon, for example, is still worth the same amount of money, or rather the same value. I don't want to say same amount of money because we're talking dollars. Ultimately, the price should increase to buy the same number of shares because the value of every $1 has decreased, right? So the stock market tends to move with inflation because I'll think of a extreme of a Venezuela or an Argentina, right? Where you can go look and be like, wow, the Argentinian market's up 70% this year. It's because the Argentinian dollar or whatever is down 60%, right? It's just the value of the assets are priced in dollars. So if dollars are losing value, you would technically see the price of a stock increase just because the value of said dollar is going down. So
With all
it
things being
is,
equal.
yeah, it's confusing, but it is a reason why the stock market tends to be viewed as something that helps protect you against a portion of inflation. Ultimately, it doesn't save you from it, but it is a diversifier for assets, much like I'd mentioned, commodities and other things that tend to inflate alongside when you get weakened dollar or inflation pressures.
There you go. Excellent explanation as always. All right, the retirement reality income check. That's what we're discussing. 2 points down. We got 8 more of them to go. And we're going to hit those when we come back. First, let's turn it over to Jack Saban. He's got news, traffic, and weather. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Jason Gaunt. Once again, our topic, the retirement income reality check. But once again, as a reminder, a little bit of a tough day today. 334 loss on the Dow, 0.71%. NASDAQ down 213, 0.93%. And the S&P 500 lower by 36 points, about a 0.5%. We're seeing some weakness in the after-hours session due to the earnings or stock performance, I should say, regarding IBM and Tesla and so on and so forth. All right, but let's get back to our topic. Again, retiree, you got a lot of different challenges than those that are still working. So we're trying to highlight these and just get you prepared. So far we've talked about the paycheck gap, right? Anxiety, right? It's you got a steady paycheck coming in that creates a lot of uncertainty. So you're fixed there. Try to get predictable paychecks. Do things like structured income ladders, annuities, bonds, so on and so forth. The shrinking dollar syndrome, Jason went ahead and explained that again. Every trip to the grocery store reminds you that prices are rising. They're not coming back. And I don't think they ever will, to be honest with you. I think we're just going to always, whenever we talk inflation, Jason, I got to hand it to you. It was years ago when inflation started to become a problem. You said something I'd never thought about before, as long as I've been doing this. And you said, I think we had a CPI report, and I don't remember the exact number. It was, I don't know, what up, 0.5% or something. And everyone's like, all excited. It's like, oh, it was only 0.5% increase in CPI. And you go, that's on top of the previous 0.3% increase in the previous, 0.4 that we got, all these previous months. And you're right. It just keeps building. And that's why, you just look
It's less up.
You're right. It's less up. Exactly. But it just keeps adding and building on the previous number and so on and so forth. So always gets something to talk about. Okay. So let's get to our third point, the healthcare wild ride. Now, the reason I want to put this point in, I read a very interesting article and I was trying to find out during the break where it was. It's either Wall Street Journal or Bloomberg, so I can't give credit where credit is due. But it was talking about the healthcare crisis facing America, right? We all know this. Jason, take a stab. Latest number. How much do you think the average, and that's a husband, wife, 2 kids, how much do you think the average family is spending per year on medical insurance premiums?
Family of 4, medical insurance, 13.
More than double. $57,000. $57,000
Out of
That's
pocket, and that's
out
not
of pocket.
outside of
Yep.
what
Outside of what the
employer
employer
is
pays.
paying to.
Yep, exactly. $27,000. And so the article went on to talk about, matter of fact, they mentioned a couple investment firms like ours, Jason, relatively small, 10, 11, member firms, et cetera. And these these CEOs of these companies are going, we're really feeling the impact. And they start talking about how they're seeing their premiums rise, 11%, 20%, so on and so forth. And then they interviewed one company that was in the construction business, larger company, a couple thousand person firm. And they're like, we can't, we're after, I mean, they've been around forever, like 50 plus years. They're like, we can't pay health insurance premiums anymore for our employees. They've got to cover it all themselves, their family. They always had to pay for their family, but now we as a firm, we can't do it. The cost is too much. And I think you're going to see this going, rising over and over again. We all know it's more expensive. You never see doctor bills or hospital bills come down. So you're going to see your insurance premiums continue to rise. So don't be surprised, come renewal time, which is, usually towards the end of the year, beginning of the next year, if your employer comes back and goes, hey, you know what? You know how I used to pay X amount of dollars for your insurance or a portion of it? I'm not doing it anymore. I can't afford to do it. It's really becoming a trend because, again, $27,000 is the average cost. But what about the retiree? Well, one major medical event can completely derail your retirement. You can have all the assets, all the cash flow you want, but if you get a bad medical event, you can derail it all, right? Massive medical bills, ambulance bills, something that we always tell our clients to do, and I'll throw it right now. Please, folks, do me a major favor. Go to, I'll get the exact name during the break, but purchase the air ambulance insurance for CalStar and CareFlight. Okay. We had a client a few years ago that lived in Minden, and out of the blue, she had a stroke, which usually happens. And she said it was almost $40,000 to be flown from Minden Gardnerville to Reno. Now, I thought that was a little extreme, but again, you don't know because you don't know what kind of medical care was given to keep her alive. And she was almost dead. I know when I was a volunteer firefighter, Jason, just we were always told when we request an ambulance, like for any car accident or whatever it was, the minute those skids, and this was 5 years ago, the minute those skids of the helicopter leave the ground, $10,000 just pulling off the ground. Not to mention, of course, the cost as you fly. So, reason I'm telling you all this, folks, for $150, $200, right around there, you can buy an air ambulance insurance through, and again, I'll get the company that will insure you for CareFlight and CalStar. You have to get two separate policies, but those are our two predominant air ambulances here locally. It is the absolute best money that you can ever spend. Best, because a lot of medical insurance does not cover air ambulance. Some will pay a little bit, some will say nope, not covering it at all. So again, very, very cheap way. But back to the healthcare wild card. One major event, of course, can derail your entire retirement. So one good thing to do, actually two things. Number one, what's your biggest risk? We all have this risk. Statistically, we're all going to need this, and that is some type of assisted living care, whether it's in home or out of the home. Please, if you're in your 60s, it gets a little expensive in your 70s if you can even give it, but in your 60s, late 50s, start talking about and thinking about purchasing long-term care. It really is not all that expensive compared to what it will cover. So that's one great way to avert the healthcare wild card. The second, of course, is setting aside a healthcare emergency fund, right? You have your emergency fund for normal living, set aside some extra money for healthcare issues. If you have to go to a lot of doctor visits, of course, if you're 65 plus, you got Medicare. But, I was talking to a friend yesterday, Jason, and he's like, most of us think $300 for Medicare. He's like, for my wife and I, it's starting at $1,000 for Medicare. Because again, it's based upon income and a few other factors. So even Medicare now is not cheap. So bottom line is set aside that healthcare emergency fund when you're working. And then even when you're, now retired, take some of your assets, put them in a healthcare emergency fund. So you have it there so you don't disrupt, again, your cash flow that's coming in from your investments. All right, let's go to number 4, Jay, the too long problem.
Right. I mean, like healthcare being a big unknown, how long you're going to live is an unknown as well, right? I often joke with people and say, if you can tell me when you're going to die, I can be very precise with this whole financial planning thing. And people are living, it used to be 60s and then 70s and then 80s and then 90. It's just not knowing how long you're going to live. Longevity is an issue. You mentioned long-term care. Those are things that sort of play into that well, but you need to be planning to live longer than you think. Everyone's like, oh, well, I'm not going to, I didn't think I was going to live to be 21, right? And now I'm 50. It just happens, as everyone knows. You blink and you're older and sorer. Mm-hmm. But when we're doing planning, I'm planning for folks 93 for men and 95 for women. That is what my planning software that I use aims at. And that's what you should be doing too, so you can hedge against that longevity risk, because it's going to be there. Income riders are available through annuities that provide lifetime income. Those are good ways to keep up with stuff. Growth portfolios, if they fit into your risk tolerance, but there certainly are at least ways to help protect yourself.
I'm so thrilled you mentioned annuities. I'm so thrilled because unfortunately, for compliance reasons, we're so limited of what we could talk about. And we'd love to have an annuity discussion with you on a one-on-one basis. Just call the office at 775-800-1801. Because we believe they have a place in a lot of our, we use them in a lot of our clients' portfolios, and they may have a place in your portfolio. But again, we need to have a discussion with you. But Jason, people are unaware of, once again, we talked about this longevity risk, and you nailed it. 90 plus years we have to plan on living. What investment can you get a guarantee that it's going to pay you for the rest of your life, or maybe you and your wife's life, right? Or spouse's life. It's so rare, but people, you mentioned that A word and people go, oh my God, no, folks, you have to understand how they work. And most importantly, how they fit into a well-diversified portfolio. They can, again, change your entire outlook on retirement income if you understand how they work. So again, we'd love to have that discussion with you about that, because we're all living longer, and I'm curious about, Jason, is, with AI, you keep hearing, Google just had a major breakthrough today in quantum computing and a chip. We don't know where AI and new technology is going to take us as far as, you always bring this up, right? The biotechs and the science behind it. We may be having this, and I hope we do, this discussion in 5 years, 3 years, who knows? It's happening very fast, where it's no longer the, early 90s that we're planning for. It's 100 because of scientific breakthrough. Yeah. Because of technology.
It tells you it's a good idea to, look at long-term care insurance now, because who knows if all of a sudden we figure out some way to prolong life, it's probably going to go up quite a bit. That's so you can maybe get a little hedge in.
Yep. It's a great point. Yeah, there you go. There you go. We're going to skip point number 5, the market roller coaster. We all know about that. We kind of touched on that earlier. We'll move to the Social Security guessing game when we come back as we continue our discussion, the retirement income reality checklist. Let's turn it over to Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Jason Gaunt. If we can be of service to you at our firm, by all means, please reach out to us, 775-800-1801, as I said, or online. Set an appointment with Jason or myself, Sanchez Gaunt, GAUNT.com. And
Yeah,
check
play
us out on social
favorites.
media.
Ask for the one of the two of us. We'll do like a little,
Yeah.
a little thing.
Yeah.
Like,
Sometimes you get both of us too.
Well, yeah, we'll do like we'll do like a little pin on the wall to be like, they wanted John, they wanted, like a little runoff of some kind. But yeah, or ask for both. You can get us,
That's right. That's right. Love it. Good point. And of course, do not forget to pick up one of our podcasts. Again, there's hundreds of them now at Spotify or iTunes. All right. We're talking once again about the retirement income reality check. Let's go to point number 6, Jason, the Social Security guessing game. We hear this all the time, and I'm not going to spend a lot of time about this. 2035 is supposed to be the magical year that Social Security runs out of money. But again, I wish I had a dime for every time over my career that I've heard it's going to run out of money. In my heart of hearts, I don't feel that it ever will run out of money, but whatever. Bottom line is this. Strategies, right? When do you claim it? I was just joking with Jason. It's scary. In March, I'm old enough to take Social Security. It'll be 62. It's like, oh, you're kidding me. Not going to do it. But, this is what a lot of people are starting to think about. Do I take it at 62? Do I wait till full retirement age? Do I wait till I'm 70? Because, from full retirement age to age 70, I get an 8% guaranteed increase by the government. All these different decisions. That's part of the cash flow planning process. So no one answer fits everybody. But do this. Here's the final takeaway. Look at your Social Security as a supplemental fixed income source. Don't look at it as the core. A lot of people do that. And they're like, I don't need to plan for retirement. I don't need to save. I don't believe in the stock market or real estate or anything else. I'm just going to rely on Social Security. Well, good luck on that one. Don't do that. Let's talk about the tax trap in retirement, my friend.
Yeah, again, planning another whole show, right, is IRAs versus non-IRAs versus Roths. Where do you take it? When do you take it? Do I owe more taxes now that I'm retired versus when I was working? Once there's a unfortunate death in the family, spouses, et cetera, you find yourself in a different tax bracket. So this is always something that people tend to get concerned about. And another reason why preemptive tax planning with a financial professional is so helpful to know what the right mix is based on your needs and goals.
I love it. I love it. All right. Point number 8, the silent wealth killer, fees and inflation. Now, wait a minute, fees. That's how we make our living. We charge our clients management fees, but we feel we're worth it. Are the fees that you're paying worth it? If not, you need to have a discussion with your advisor or come talk to us, because we like to deal on the institutional side. We try to find institutional pricing. It can be done with us. I don't know about your current advisor, but it can be done with us. But look at what your fees are, right? You need to understand, because they do have an impact, right? So it's all about value. Are you getting service, returns, et cetera, to validate those fees? If not, please give us a call. And of course, deal with folks like us, fiduciaries. We are fee-based fiduciaries. Jason, if you don't mind, I'll just throw in the last two because the music's playing. The family blind spot, again, the estate plan, so very important. We know all that one. And then the confidence crisis. Remember, 80% of pre-retirees say they don't know if they're on track. And Jason, what's the solution to not knowing if you're on track?
Work with a planner and figure it out.
There you go. Put it on paper. It's like driving across the country without a GPS. You can't do it. Can't get into retirement unless you plan it, in our opinion. All right. You are now up to date on the retirement income reality checklist. This is just a smidgen of what we do at our firm. By all means, please give us a call or go online and set an appointment. It's really simple. My friend, you're going to be off the next 2 days. I wish you a great trip to go see your incredible son and
thank you.
Get a little bit of beach weather. So I will fly solo on Friday. I'll miss you. I'll think about you. I may even call you,
Yeah, do it, please. Yeah.
But I'll be back tomorrow with the boys. Thanks, Jason. Had a great time with you, buddy, as always. We'll do it again tomorrow on the Jon Sanchez Show. God bless. Have a great afternoon.